Hey, what's happening, guys? So looking at the S&P and what's going on with the S&P, I wanted to just take some time to go over a few things because I see this thing trending about the kiss of death, that is showing up on the S&P 500 because it simply broke market structure. It broke structure on the monthly chart. As you can see here, you have the monthly low from June here. This area was broken by the candle in September, and now we're in October. Normally, following the kiss of death, you see the market rally for about 2 months before it actually falls out. Me being a futures trader, I trade the S&P 500 futures on the mini contracts on the futures. So I actually pay attention to what's going on to the S&P. So knowing historically, once you see a break in structure like this, the AKA kiss of death, you'll see the market do that rally, and then it basically the bottom falls out on it. So if we're talking about historic data, we're going to look for it to make that pullback. Where is that pullback going to be, and what's going to happen after that? I'm looking at a previous monthly low in August here, just under 4,000 at 39.75. Now, if we go to the weekly chart and start breaking it down, you can see here, this here would be a order block of some sort. Let me see here on the daily. We actually have a gap, a liquidity gap here. So if we do this, liquidity gap was left there on the daily chart. Go down to the 4 hour, see if we can break it down even further. There's even more of a gap here. If we go down to the 3 hour, that gap is still there. 2 hour, the gap is still there. And the 1 hour, that gap is there. So being that that gap shows on the daily, this would be my strongest area here that I'm paying attention to. Let me see. If you look at the 1 hour, I don't see any blocks of any sort that could make a difference. So based on what I'm seeing here, based off of that daily chart, I would definitely pay attention to this area here. This area makes a difference to me because once price retraces back in here, it's grabbing the liquidity that it needs. I'm pretty sure we could see it come all the way up to just below 4,100, and then the market should react and go down. But what we will be looking for is a rejection right up here in this zone. All we can do is wait and see what we have here. Since we have this new low created, I would wait for the market to retrace, break structure here, and I would look for something like a break here. Let's change the color on this. A break here, a retrace back here to this zone, and then continue up into this zone here. Once it gets into this zone, we look for the rejection. Market retraces back down, rejects, comes back up, retests one more time, and then drops, continues dropping. This is the play that I would be looking for, something similar along these lines. Now, you never know because we can't predict the market. We can only move with it. That's the key thing. So I just wait for the market to give confirmation. At this point, it's giving confirmation that it wants to go bearish on a monthly scale. So for the next 2 months, I would expect a bullish push, and then we get a bearish push shortly after. So sometime around late December going into January for the new year, the stock market could go completely bearish. But all we can do is watch, wait, and see. But I just wanted to drop a quick video explaining my point of view on what's going on the S&P 500s, just simply based off of market structure alone. Just watch, have no FOMO, and make sure you secure your bag. All right? Y'all take it easy. We'll be back for another video soon.